Click the bell icon to get latest videos from Ekeeda.
Hello friends, let us discuss now one question on death of partner where amount of goodwill is already given in old balance sheet. Goodwill is existing in firm. Let us go through the question. Following is the financial position of Vishal, Sagar and Amar, who were equal partners. So ratio is 1:1:1. Assets, we have goodwill, machinery, stock, debtors, bank. You can see here goodwill is existing in balance sheet. Capital of Vishal 12,000, Sagar 9,000, Amar 8,000. Creditors 6,000. Reserve fund will be distributed among partners in their profit sharing ratio. Profit and loss account 6,000. This will be also distributed among partners in profit sharing ratio. On 1st October 2012, Amar died. Here balance sheet is given as on 31st March. One of the partner died on 1st October. That means he was there from April to September. That is a period of 6 months. And the following adjustments were made. Goodwill of the firm was appreciated by rupees 3,600. So it is 6,000 appreciated 3,600. However, only Amar's share in appreciated value was raised in the books. We are required to do working note for this. RDD was maintained at 5% on debtors. Here debtors are 9,000. So we'll have to calculate 5% on this. It comes to 450. This will be deducted here. And second effect, a revaluation account debit. Stock is valued at rupees 10,000. The old value of stock is 11,000. That means stock we are required to reduce by 1,000. Second effect will be revaluation account debit. Machinery at 14,900. Machinery is given 16,000. 14,900 means it is reduced by 1,100. It will have one effect here, less from asset. Other effect, revaluation account debit. Amar was to be given his share in profit up to date of death on estimated profit based on previous year's profit rupees 12,000. We are required to do working note for this. Amount due to Amar was transferred to his executor's loan account. Prepare profit and loss adjustment account. Balance sheet of Vishal and Sagar. Goodwill of the firm was appreciated by rupees 3,600. However, only Amar's share in appreciated value was raised in the books. Let us do working note for this. Goodwill is given 6,000. Appreciation is by 3,600. Amar's share of appreciated goodwill. Appreciated goodwill multiplied by Amar's share. Appreciated amount of goodwill is 3,600. 1/3 is Amar's share, which comes to 1,200. So entry will be goodwill account debit 1,200 to Amar's capital account 1,200. We are required to add 1,200 to goodwill, and second effect will be it will be recorded to the credit of Amar's capital account. Add 1,200 to goodwill on asset side. Second effect, credit Amar's capital by rupees 1,200. Amar was to be given his share in profit up to date of death on estimated profit based on previous year's profit rupees 12,000. Last balance sheet date is 31st March. Amar died on 1st October. So April to September, that is a period of 6 months for which this share of profit is to be considered. Let us do working note. Amar's share of profit till death, that is for 6 months. Estimated profit multiplied by Amar's share multiplied by period divided by 12. Estimated profit 12,000. Amar's share 1/3. Period divided by 12. 6 divided by 12. Amount is 2,000. Entry is profit and loss suspense account debit to Amar's capital account. Profit and loss suspense account will be transferred to the asset side of balance sheet. It will have second effect, Amar's capital account credit. We have prepared working notes. Let us start to solve the question. We have opened profit and loss adjustment account, that is revaluation account, partners capital account, and new balance sheet after death of Amar. Let us start with liability side. Vishal's capital 12,000, Sagar's capital 9,000, Amar's capital 8,000. This will be transferred to their respective capital account on credit side. Partners capital account credit, by balance brought down, Vishal 12,000, Sagar 9,000, Amar 8,000. Here another item affecting capital is reserve fund. It is 9,000. It will be distributed to all partners in their profit sharing ratio, that is rupees 3,000 each. Next item affecting capital account is profit and loss account, 6,000. This will be transferred to partners capital account in the profit sharing ratio, that is rupees 2,000 each. Partners capital account credit, by profit and loss account, Vishal 2,000, Sagar 2,000, Amar 2,000. Creditors 6,000. There is no any adjustment on creditors. This will be transferred to new balance sheet on liability side. New balance sheet liability side, we have item creditors, outer column 6,000. Let us proceed to asset side. Goodwill 6,000. There is an adjustment on goodwill. This will be transferred to new balance sheet. Amount will be recorded in inner column. Balance sheet asset side, goodwill, inner column we have recorded rupees 6,000. Next we have machinery 16,000. There is also adjustment on machinery. Balance sheet asset side, machinery, inner column 16,000. Stock 11,000. There is an adjustment on stock. New balance sheet, it will be recorded amount in inner column. Stock inner column 11,000. Debtors, there is an adjustment of RDD. Amount of debtors 9,000 will be recorded in inner column. asset side debtors, inner column, amount is 9,000. Next we have bank 8,000. There is no adjustment affecting the bank balance, so it will be recorded in new balance sheet. Amount will be recorded in outer column. New balance sheet, asset side, bank balance 8,000. Let us proceed to do adjustments. On 1st October 2012, Amar died and the following adjustments were made. First, goodwill of the firm appreciated by 3,600. However, only Amar's share in appreciated value was raised in the books. We have already done working note for this. Let us refer to that working note and give effect. Amar's share of appreciated goodwill 3,600 appreciation, 1/3 is Amar's share, comes to 1,200. Goodwill account debit to Amar's capital account. It will have one effect. It will be added to goodwill and credited to Amar's capital. Partners capital account, credit side, Amar's column, by goodwill amount is 1,200. Goodwill 6,000, add Amar's share 1,200. Now goodwill is 7,200. Relating to Amar's capital, we will do this adjustment number 4. Amar was to be given his share in profit up to date of his death on estimated profit based on previous year's profit, rupees 12,000. We already done working note for this. Amar's share of profit till death, that is for a period of 6 months. Estimated profit 12,000, Amar's share 1/3, period is 6 months. We got the amounts 2,000. This will be credited to Amar's capital account and it will be recorded on asset side of balance sheet. Partners capital account, credit side in Amar's column, by profit and loss suspense account 2,000. New balance sheet asset side, profit and loss suspense account, amount is 2,000. RDD maintain at 5% on debtors. Debtors are 9,000. 5% will be 450. This will be debited to profit and loss adjustment account and it will have second effect. New balance sheet asset side, we are required to deduct 450 from amount 9,000. Profit and loss adjustment account debit to RDD 450. Debtors 9,000 less RDD 5%, that is 450. Amount is 8,550. Stock valued at 10,000. Book value of stock is 11,000. That means it is reduced by 1,000. It will have one effect. Profit and loss adjustment account debit, and another effect, new balance sheet asset side less from stock. Profit and loss adjustment account debit to stock 1,000. Second effect, new balance sheet asset side, stock 11,000 minus 1,000, that is 10,000. Machinery at 14,900. Machinery book value is 16,000, new value 14,900. Machinery book value is 16,000, revised value is 14,900. Difference 1,100. One effect, profit and loss adjustment account debit. Profit and loss adjustment account debit to machinery 1,100. This will have another effect, new balance sheet asset side. Machinery 16,000 less decrease 1,100, revised value 14,900. We have given effect to all adjustments. Let us close now profit and loss adjustment account. Profit and loss adjustment account, credit side we are getting balancing figure 2,550. This is loss This will be distributed equally among all partners. Vishal 850, Sagar 850, Amar 850. This will be then transferred to the debit of capital account of all partners. Partners capital account debit to profit and loss adjustment account. In each column, 850 loss transferred. Partners capital account debit. We are required to find out now balancing figure so that we can know amount payable to Amar's executor. It will be transferred to Amar's executor's loan account. Balancing figure of Vishal and Sagar, those will be carried down, that is transferred to new balance sheet. Balance of Vishal and Sagar 16,150, 13,150 will be transferred to new balance sheet. Balance of Amar will be transferred to Amar's executor's loan account 15,350. This will be disclosed in new balance sheet on liability side. Finally, we are required to close balance sheet of firm after Amar's death, that is balance sheet of Vishal and Sagar. Here we get total on asset side 50,650 and liability side total is also 50,650. That means balance sheet is tallying. That means we have done all our adjustment correct. In this question, particularly we have discussed and understood how goodwill should be treated when it is appreciated, but already we have value of goodwill in balance sheet. Thanks for watching this video. Stay tuned with Ekeeda and subscribe to our channel Ekeeda. Thank you.